Good evening, ladies and gentlemen. My name is Jonathan Kandwanoho, and I'm the team leader at Jonaki Holdings Limited. And at Jonaki Holdings Limited, we give loans, we offer financial relief, we offer credit. So if you have a deal that you want to close, if you have that consignment that you want to clear, if you have that car that you want to clear the border post, or you want to import, Jonaki Holdings Limited is just a call away, it's just a tweet away, it's just an email away, right away from our website, www.jonakiholdings.com, and we shall be able to reach out to you, and we shall all be happy. You'll get that car, we shall give you that facility, and we'll all be happy. So, it's a pleasure to have you, and as I've already said, iron sharpens iron. I make time to come here and talk to you, share with you what the Lord has put on my heart. And I know that in one or the other, it will uplift you. I've had a few testimonies that guys wanted to close shop. Some of the guys wanted to close shop, and after watching one of the videos that I posted, they were able to actually resuscitate their business. So it could be at the verge, and this would be the only moment that you can resuscitate or even probably keep in business. And you see, you're not employing you alone, and you're not serving you alone. As I've already said, you're working with other people. So meaning that you're actually supporting a number of other households that you might not be aware of. You might find you're employing someone who is married and they have maybe 4 children. So the guy is married, one person employing, and then 4 children plus the wife. You're actually employing over 6 people in one. So before you think of closing that business, or think of not starting or birthing that idea into a business or growing it into a business, think of how many people you'll be able to actually employ, how many people you'll be able to support. But also, before you think of doing it the other way around, think of the people that you're serving, because you could be there and perhaps you lend money, but many business leaders, many business people are going to come to you to apply for money. They're going to come to you to apply for loans. And using your money, they're going to resuscitate their businesses. So in a way, you find they're also employing other people. So you see how the chain runs. You're giving someone money, thinking that you're serving one company. But this company employs maybe 10 people. And those 10 people have other households that they are supporting. So in a way, you're supporting as many businesses. And if you're in business and you're serving you alone, then there is a problem. Because before you know it, you cannot consume all the products that you produce. You're either underproducing, and before you know it, you'll close shop, or you're not marketing enough. Either way, you're going to close shop. So you're meant to serve yourself, but also others as well. Because you only keep in business by serving other people. So as an introduction, as a preamble, is to encourage you, start that idea, birth it into a business, employ some people. And if you're already running and things are getting harder, they are tricky, please push. Great, so let's go straight to our today's topic. And our today's topic is part 2 of what you actually must know before you start money lending. This you must know before you start money lending. I did part 1, you can make time and go and watch it. This is part 2, because there are a number of things that you actually must know before you start money lending. I've seen colleagues, I've seen friends who have started money lending, and before you know it, they have closed shop. You see, if you are over 40-something million Ugandans, we cannot, Jonaki Holdings Limited cannot serve all these clients alone. That's why I support, that's why I mentor other lenders. Someone might be thinking, you know what, you're building your own competition. It is healthy, it is fine. If I'm not able to serve some of the clients, you should be able to serve them if you're lending. Because I have my requirements, you might find that some of the requirements we have at Jonaki might not be the same requirements that you actually have. So up there is very light. Up there is not crowded. So we can keep in business together. That's why I endeavor to share with you, so that where someone hit a roadblock, you do not hit the same roadblock. Where someone found a hiccup, you don't find the same hiccup. So go learn these things, apply them. If you want to start lending, learn them before you even start. Because if I had this opportunity, if I had such YouTubes and where I could just log in and watch these videos, I would have jumped a few ropes that tied me, a few things that cost me a lot. I've shared in my story. We lost huge amounts of money. But had I been helped to be told, do A, B, C, D, I wouldn't have lost that amount of money. It's only now that we realize that, you know what, we need to support our colleagues to do it well. So straight to key 5 things that I want to share with you today, in addition to the ones that I shared in part 1. Point number 1, start with the right mindset. Start with the right mindset. If you want to start lending, yes, it's true that you want profits. It is true that you want to make money. And definitely, this business makes money. But if you come with that end in mind, if you come with that mindset in business, you won't be any different from some of the guys who lend with the intention to defraud clients, who lend with the intention to foreclose on the client's collateral. I've shared an example before. If you're lending money, you should be lending in a way that you want that client to pay back that money. If I have a collateral that is worth 100 million and my financials qualify me for only 10 million, you shouldn't lend me the 50 million that I want. Why? Because at the end of the day, you're going to foreclose on that collateral that I have, on that land title that I have, on that car logbook that I have. Because you see, you assessed me and you are well aware that I cannot qualify for this facility, but you went ahead and gave me the money. That means the fault was on the side of the lender. Why? Because you did your assessment and I was not qualifying, but you went ahead and issued that money. You shouldn't ideally have issued that money. But if you have the right mindset, just like we do at Jonah-Key, you wanting 100 million does not guarantee that we're going to give you the 100 million. And it is to your own good, but also to our own good. Because if you do not pay, we shall foreclose on that collateral and you'll lose. Because if you wanted 50 million and we gave you the 50 million and the land title you're committing is 100 million, we shall foreclose on that land title. But it won't end well, to be back and forth. So you lose, but also us, we shall taint our name. So it will be a double-edged sword. We shall lose on both ends. So that's why we see to ourselves, you know what, based on your financials, we can only lend you 20 million out of the 50 million that you've applied for. But because your financials are not good, you have ABCD, we cannot actually even give you the money. And we give you the reasons that's why we've not given you the money, even when you have a collateral that covers the money. So if you're starting to lend money, have it at the back of your mind that if you're going to keep in business and have a good name, you have to have a right mindset. That irrespective of whether the client has a collateral or not, or whether the collateral is very valuable, make sure you assess the client properly. It will benefit you, but as well as the client that you're actually serving. Point number 2, start where you're at, with your colleagues, with your friends. You must have had several adages, don't lend to your friends, don't do business with friends. And if you don't do it with a friend, whom do you do it with? Because they are the friends that are close to me, they're the friends that I'll start serving first, they're the friends that you'd like to get feedback from, they're the colleagues that are beside you. For example, if you're producing a particular product, let's say liquid soap, or you're producing maybe a shoe, you have a shoe making company, did you start selling to strangers before you actually tell it to your friends or your colleagues? You definitely have to start with your friends. But in starting with your friends, you have to do it cautiously. Because if you're assessing your friends, you assess them properly as well. You should have the boldness to tell your friends that, you know what, you do not qualify for the amount that you've applied for. You can only qualify for this smash. And if they are close friends, if they are really your friends, they should be able to actually understand. I gave an example on how I started. I started where I was working. I started with lending to my close friends, my friends that I was working with in the same institution. Because as formally working, I was doing it informal. When I started informally lending, but I started with colleagues who are close to me. So start with your close circles, because the issue of money, the business of money, not even money alone, but money, especially money, you bank on trust. Someone has to trust you before they can actually get money from you, especially for good clients. If you're going to serve good clients that will be able to pay back, they have to trust you first. This cuts across all businesses, but for money it's exceptional. They have to trust you first. That's why someone will actually come to Jonah-Key, where we lend at 8%, and leave out an institution which lends out at 4%, because they do not yet trust that institution, because they are not sure whether if they commit their collateral of 400 million, they will survive with that company. They are not sure whether they will not lose that property. So it's an issue of trust. They have to trust you first. And who trusts you more than colleagues? Who trusts you more than friends, more than close relatives, those are the guys that you're going to start with if you're doing business. So if you're launching today, tomorrow, or next week, or next month, first market amongst your circles, your colleagues, and then you can start learning. But you have to be good at your assessment. You'll make time, watch a few videos, or enroll for a mentorship. I am starting a mastermind on March 2nd, which will be a Thursday. It will run 5 sessions, 1 hour, 30 minutes per session. We get to integrate these things in detail, so that when you're launching, when you're starting, you start on a good platform, on a good ground. Yes, so you can sign up. There is a Google form. You can sign up, and someone will contact you. Point number 3, do not start on a debt. You see, people want money. People want money. Today, tomorrow, the other day, people will never cease to want money. And they always want money, and they still want money. And I guarantee you, you cannot serve all the people. So if you have 10 million that you're starting with, you may even serve only 2 clients if you don't put a few things that have been sharing in place, if you don't get guided well. Because you can imagine, if you're starting to lend with 10 million, why on earth would you advertise for loans of 5 million per client? Because you're going to only serve 2 clients and you'll be out of cash. And before you know it, because you've not mastered your game, you're going to borrow. Borrow from the bank, where the rate is probably very low, or from relatives, from colleagues, or from family. And before you know it, you've started your business on a wrong button, because you started on a debt. Now, what happens when those clients that you've served, that you're starting with, default? You're going to default on the person who gave you the money. And before you know it, you're in hot soup. Before you know it, you're losing that car. Before you know it, you're losing that land. You're losing that home. Why? Because you started that business on a wrong button. This even applies to other business. Don't start with a debt, especially if you're piloting, if you're starting, if you're doing it for the first time. Don't start on a debt. Debt is only helpful if you're scaling up. Jonaki Holdings Limited, I started with my small amount of money, and I would borrow when I was very certain that someone is going to actually pay back. I would go borrow on demand. If I know that, let's say Enoch wants 10 million, I'll go borrow strictly after assessing Enoch, and I'm very sure that Enoch qualifies for this facility. So I'd go borrow at a lower rate, come and lend at a higher rate. That's what it is. Do not borrow to come and put money on your account and start pushing for clients. You're not sure when those clients will come through, but before you know it, you're paying interest on that amount of money, and yet you've not dispatched it. So borrow on demand. There are 2 methods. One, it can be a pull, or it can be a push. For a push is when you actually borrow, have money on the account, and then start pushing for clients. Now that is dangerous, because then you start compromising on your steps, on your procedures, on your assessments, because you want to disperse as much money as possible. Because you're already going to pay interest on the money that you have on the account, because you borrowed it. But for a pull is when you've already assessed the client, you're very sure that they qualify, they are even able to pay, they have the capacity, then you actually go and borrow. That is a pull, and I advise that you take a pull system. Go borrow when you are assured that someone is ready to take up that money. And as soon as that person pays, pay it back, because it doesn't make sense to keep paying interest on the monies that you're not using, that you're not loaning out. So as soon as that very client pays, don't mishandle that money. Don't mix it up. Don't spend it till you wait for other clients. Have an arrangement where when the client pays up, pay back the money. Unless you have another client lined up to use that very money. So do not start on a debt, because it's a very, very wrong foundation to start at. Point number 4, limit the amount given out. Look, if you're starting to lend the money with 10 million, you can only, if you're lending 5 million per individual, you can only lend to 2 clients. So one thing I advise is, do not lend more than 20% of your loan portfolio to one client. So meaning that if I have 10 million that I'm starting with as my capital, I have my license and everything is organized, I can only lend to a maximum of 200,000 to one client. 200,000 or 2 million. That is 20% of your loan portfolio. 20%. Meaning that then it will limit you on the amount of money that you actually give out. So you cannot afford to give out the 3 million, the 2 million. You can only afford to give out 200,000 per one client. Meaning that by the time you serve all these number of clients, based on the amount of money that you have, the capital that you have, the other clients will be paying back. Then you have the cash flows. But then, when a client defaults, you won't go in a ditch. You won't go down the drain because you run short of business. You'll close shop. If I give my 10 million that I'm starting with to two clients, one client closes shop, or one client fails to pay up, I am halfway gone. Second client closes shop, I am totally gone. I'm totally gone. So it's what I'm trying to show you. Do not lend more than 20% of your loan portfolio to one client. That even if I want to buy your business, you won't be having 2 clients. So you won't have the ground to sell that business to me. I advise the book, Build to Sell. That even if you don't want to sell that business ultimately, it will help you ground that business, and it will also help your business to grow. So limit the amount of money that you give out. If you see banks even limit the amount of money, who do you think you are? If the banks are limiting to 250 million per one client, if some of the banks are limiting, who do you think you are? Are you picking the money from the sand? So you need to limit the amount of money that you give out. And that will help you to sieve out your niche, to know which clients you're serving, to know which loan products you're looking at. It will give details of a few things that you need to polish up. And that's why you should actually come for a mastermind. That's why you should actually sign up so that we can walk this journey together. If you have someone who is doing the lending and doing it well, please attach yourself to that person. If they can charge you, pay them, because it will save you a lot. The last point is have your collecting strategy in place. Giving out money is very easy. We have a proverb. I think it is in Uganda. That the person that you lend when you're seated, you tend to collect from them when you're standing. Why? Because giving out money is very easy. It is very easy. It's just clicking the button and dispersing the money. But collecting that money is not as easy. So wherever you lend while seated, you tend to collect from them when you're standing. Because it is very easy to lend, but it is very hard to collect. So have a strategy in place. Whereas you're giving out that 5 million, that 10 million, that 50 million, that 100 million, especially if you're starting, what strategy do you have in place to collect that money? How have you done the assessment? Have you done it well that even the client will remind himself or herself to pay back? Have a strategy in place on how you're going to collect that loan before you actually lend it out, before you give that money out. Have a strategy in place. So those are 5 things. Have them in your head. In addition to the first session, the part 1 that I shared, you look it up. Please subscribe. Please comment if this video has been helpful. But these are the 5 in part 2 that you need to look at. If I may summarize them, as our time is fast spent, start with the right mindset. Point number 2, start at where you're known, with your colleagues, with your friends. Point number 3, do not start on a date. Point number 4, limit the amount of money that you give out to any particular client. Point number 5, have your collection strategy in place before you lend out that money. If you do those 5 things, plus the part 1 that I shared, you'll have a good jump start. You'll have a good starting ground. And I tell you, I kid you not, you're going to thrive, you're going to progress. And I'll be very happy. I'll not have wasted my time to come here share with you. You also will not have wasted your time and your data to come and watch me. So go do learn 1, 2 things, but above all, implement. If you're already lending, start implementing now. Because if you don't, you'll have wasted your time and your data. You'll also have wasted my time and my data. If this video is helpful, subscribe to my channel my YouTube channel, Jonan Kandwanaho, but also check us out at www.jonakiholdings.com. I love you guys. Thank you for tuning in. God richly bless you. God bless the works of your hands. God protect you. God cover you. Go out there. Just like you get this knowledge, go help someone. Go help someone. So that you can create more gap to learn. Whoever does not pour out cannot create space to learn. So go help someone so that you create space to learn. Go help someone so that this industry can be polished up. Go help someone. Go help someone. Go help someone. I love you all. Thanks for tuning in. Have a blessed Friday. Enjoy, given the country you're in. Enjoy the rest of the weekend. See you next Friday from 5:30 to 5:50. Strictly 20 minutes. Love you all. Bye-bye for now. Thank you.